Well, good morning, everyone. Thomas Montgomery with IIMFL and Smart Money Alliance. It is Wednesday morning, December 2nd, 2020, and it's our pleasure to visit with you. We get together on this Zoom webinar bridge at 8 o'clock Central or a minute or so before on most weekdays. The purpose is we gather together with our distribution partners, whether you might be an affiliate or a joint venture incubator partner, and go through topics, techniques, strategies, and answer any questions that you may have. Today's topic is split into two. We're going to talk a little bit about best practices of creating a funnel through education, which you see there on the screen at the moment. And then secondly, on Monday of this week, we gave an overview of the role of the mentor through the 4-week process. Yesterday on Tuesday, we focused on week 1, what you need to know, what you need to do to make sure that the client has a great experience. And then today on Wednesday, we're going to go through the week 2 topic. Tomorrow on Thursday, we'll cover this. And then Friday of this week, we'll cover week 4. But let's go ahead and flip back to the flyer that we had here, and let's start with this. Obviously, education is crucial, and it's important because it's a credible and valid way to create a sales funnel and to develop key influencer relationships. But it's even more relevant because most entrepreneurs, most small business owners don't know what you need to convey to them. The typical small business owner says Anna Marie, Annette, Anthony, Barry, Charlotte, Christopher, Kwong, EJ, Joseph, Mark, Robert, Tony, or others that are on the webinar. They're just going to tell you, I just want capital. I just need money. I just need money. Well, what do you and I know is that you have to identify the right source of capital based upon each client's mitigating circumstances, and we have to meet the credibility standards. And so I'm not surprised when the average entrepreneur doesn't think of it in that way, because our educational system, as we always talk about, teaches people how to get a job rather than create jobs. But I become disheartened when I hear our distribution partners overlook that. You know, they'll refer someone in, well, 4 weeks has gone by, why aren't they funded? Well, we want to get them funded as soon as possible. But guess what? They have to meet the credibility standards of whatever source of capital that we're moving towards. So with that being said, this educational message, we commonly refer to it as the 27 mistakes, is a very credible, very effective, a fun way to create a sales funnel and develop relationships with key influencers. Now, what's in the 27 mistake video or PowerPoint? To no surprise, we go through common reasons why small businesses are not able to access capital. Again, it may seem obvious to you, but I promise you the average small business off the street isn't thinking this way. So it's so important, so valuable that you take a little bit of your time and help educate them. Now, the end result is they're going to realize, oh, wow, okay, there's some issues that I need to address, and I need to talk more to Anna Marie, to Annette, to Anthony, to Barry, to Charlotte, Christopher, whomever it is that is educating them about how we can assist in those areas. And in many cases, it's going to dovetail perfectly into your joint venture incubator. Rather, they just want to come in and just get a commercial address, because you can't build business credit without a commercial address. Maybe they like the convenience and the turnkey package of the full incubator. Maybe they want an option with no upfront cost, and they're just going to get started with you with the Access to Capital program. But regardless, this 27 mistake content is a great way to be able to educate and create a funnel. Now, in terms of implementation, there's a couple options that you have. So let's go through those. The simplest of which is we've created a website right here at the bottom, 27mistakes.org. And frankly, you could just refer them to that website which will automatically play the on-demand YouTube video. And then you could follow up with them afterwards. Hey, what do you think? What questions? And then, pivot them into a client. So that would be the method of least resistance, least effort on your part. But I don't know that it puts you in the position of being an expert, because all you're doing is having them watch a video. So it's a viable option. We'll call that option one. Just plug them in over here. The next option would be for you to teach this. Now, you could teach it live. You could teach it via webinar. It doesn't really matter. But if you're teaching it whereby they're hearing it, we'll call it live, whether it be in person or online, now they're hearing your voice. You're building more credibility with them. They're building more trust with you. And then the conversion rate into one of those offerings, typically either the no upfront cost access to capital with the guaranteed $100,000 capital raise, or getting started with a commercial address, or coming into the full incubator, is higher. So the conversion rate will be higher if they see you as a credible resource to help them get to where they need to be. But in today's in today's health environment, I should say, it is difficult to teach in person. Prior to the pandemic, that was our bread and butter. We'd go teach at chambers and churches and libraries, and you may still be able to do some of that in your area, but you may not be able to, and that's okay. So you can use Zoom or another means and teach online. Zoom gives you the ability, of course, to record it, just like we're recording today's training. And so I realized that what would be easiest for you is to do it live once, record it, and then just send out the recording. And again, that's similar to scenario one. That could work. But if you were to start to create a schedule of when you would be teaching this message on a regular basis and drive people into those events, you're going to seem more credible, more relevant, more important to them. Well, how often would you want to teach it? Well, you could set it up once a week. You could set it up a couple times a week. If you're an incubator joint venture manager with us, either yourself or someone on your team, I think it would make a lot of sense to be teaching this every day or a couple times a day. Maybe a daytime slot each day and an evening slot. And you might be saying, well, Tom, that's crazy. I'd be teaching 14 times a week. Well, yes, but we're going to be able to generate hundreds of thousands of dollars of profit for you. And this is a key way to generate a funnel. So with that being said, it's up to you if you want to teach it live or just drive people to the canned version. If you want to teach it live, you can do it in person or via Zoom webinar, and you can determine how frequently you want to teach it. But I would encourage you, the more the better. I would encourage you to set up an account with Eventbrite, and then have people register for your 27 mistakes through Eventbrite. That way, and then after they've registered, then give them the link to be able to attend the live session, or I guess even the recorded session. That way you're managing the funnel, you're able to follow up with them. And even if they don't attend the educational event live live or canned, you at least have their contact information to follow up with them. So best practice would be to set up an Eventbrite that is branded with your incubator, right? Because when we're setting up joint venture incubators with each of you, it has the name of your entity. It has your phone number on it. You run it, you manage it. You are the joint venture incubator manager. And so set up an Eventbrite branded to you, and then have them register for however you plan to educate, in person, online, live, or canned. What questions do any of you have about this part of the topic today before we get over and dig into mentoring on week 2? Who has any questions regarding getting active? Because we have one new joint venture partner, great guy, And he had texted me late last night, tell me what to do today, meaning Wednesday. He texted me yesterday, Tuesday evening. What do I do today? Well, we need to create a plan, a marketing plan. And frankly, the way that we would recommend creating a marketing plan is through education. So it starts with getting the event right, get it branded properly, create a schedule. And then, of course, we're going to need to promote. We're going to need to drive people into that. You can do that through meetups, through key influencers. We can give you lead list of newly formed businesses, home-based or otherwise. But we need to create this educational structure first and then start driving people into it. Okay, so if there's no questions on that, we're going to move on to the second topic. All right, so EJ's asking, is there a script for leading the webinar? So yes, in the sense that we have the PowerPoint that you can use, and we have an on-demand version that we've already recorded that you could listen to. So I think that should be enough, because by having the PowerPoint and then listening to how we present it, and you can put your own twist on it, of course, but it shouldn't be a problem. You might say, well, I'm not really comfortable teaching. That's not a problem. You can be a joint venture incubator manager and have financial literacy educators on your team. We just talked about that recently on a different training. You should have a team of financial literacy educators. Some of them will be comfortable in doing these things and others won't. You're running the incubator. You do not have to be an expert in all aspects. You should be the leader. You should coordinate. Obviously, you should manage the money, but you don't have to be an expert in public speaking or conducting webinars. If that's not your skill set or your comfort zone, that's okay. You don't have to make it your comfort zone. Then when you're adding financial literacy educators, you're going to want to look for at least one or some that can fill this void, because education on these topics is what's going to generate wealth for you. If you don't take an educational approach, if you take a sales approach, it's going to be a more difficult journey. Okay, so again, we know that when clients enroll in the access to capital, or if they come into the full incubator, we're going to start with the small business certification. And that is a 4-week curriculum where we're building financial literacy, and we're also building their loan package. We're preparing them for funding. As a joint venture incubator manager, you are the mentor, and of course you can delegate that, but you are the one, or whomever you delegate it to, is mentoring them through this 4-week process. And again, on Monday of this week, we talked about the process in its entirety. Yesterday on Tuesday, we talked about what do you do and how do you do it on week 1. So now we're going to talk about what happens on week 2. So keep in mind that once we load a client in to the curriculum, the 4-week curriculum, our CRM is going to advance them to the subsequent week every 7 days. So if they want to move faster, they want to move slower, it doesn't matter. Every 7 days, the next round of curriculum opens up. And that's very similar to when I was a college professor. We did online learning. We opened up, we used Canvas for our college students, but every week we opened up the next chapters, the syllabus, the content. So on day 1, they'll access week 1. And during that week, you should have your first mentoring session with them, which we covered yesterday. And so then on day 7, no earlier, no later, the system will automatically send them the week 2 content. So you don't have to do anything to cause that to happen. And frankly, you don't do anything to keep that from happening. It's going to automatically progress. Now, maybe you haven't met with them yet for week 1. They were a little bit delayed in scheduling with you. It's okay. It's okay. So then you would just backtrack a bit when you're visiting with them. The reason that we want to auto advance every week, every 7 days, is so they can never come back and say, man, I signed up and nothing happened. It's like, oh, far from that. As long as you gave us a valid email address and you're checking your email, you'll see that we're progressing forward every week. And of course, At the same time that we send them week 1, we're also sending them your Calendly link, encouraging them to schedule weekly calls with you. So the only reason with this new model of servicing clients that they would feel like that they're not being handled appropriately, that they're not getting what they expected, that they're not progressing towards funding, is their unwillingness or incapacity to follow our coaching. So you and I are protected in that regard. So week 2, the topic is on building business credit. And of course, you can watch that presentation by clicking here. We're very transparent. The whole world can see that. Now, when they get the email, they're going to get a link to this same content. They're also going to get the participant guide. As I think you know, we use an award-winning curriculum developed by the FDIC, promoted by the SBA, as the backbone of our educational curriculum. It's bulletproof. I don't think there's anyone that could come to you and say, what you're teaching is not appropriate, it's not relevant, it's not credible. No one could say that. I really believe that. It's bulletproof. Again, it's award-winning curriculum developed by the FDIC, promoted by the SBA. So we have what's called a blended learning format, and this is actually where upper level, college level education is moving, whereby they can access the educational topic on demand, not just from this website, from the email that they receive, but then they're going to have one-on-one time with you, the instructor, the professor, the mentor, if you will, to talk about implementing what they've learned. So there's a couple primary things that you're going to work with them on week 2. So they're going to schedule a call with you, and let's just pretend Diamond is my client. She scheduled a call with me, and here it's week 2. So I'm going to call her at the scheduled time. I know where to call her and when to call her because she used my Calendly. And I'd say, well, Diamond, thank you so much for scheduling this follow-up call. Is it still a good time for you? And if it's not, it's okay. I'm just going to say, well, that's fine. Use Calendly and we can reschedule. Life happens. You're not going to hurt my feelings if we need to reschedule. If Diamond doesn't answer the phone, I will not leave a message typically, and I'll call right back. And then I'll leave a message if she doesn't answer. And it'll just be real pleasant. Hey, Diamond, you'd scheduled this time for us. Sorry that I missed you. No worries. Please use Calendly. Reschedule for a day and time that's more convenient for you. Hope all is well. Talk to you soon. And then you'll want to make note that you left a message. And I'm just using Diamond. She's one of our joint venture partners, just randomly, because you don't want Diamond coming back saying, Tom, you never called me. And I'd be able to look at my notes and I'd say, oh, Diamond, I apologize. I called you at 3:30 and 3:31 and you didn't answer and I left you a message. You need that type of ammo because some people are a little loopy and they'll just want to throw arrows at you. You didn't call me. Well, my phone didn't ring. Well, I'm sorry if your phone didn't ring. I tried you twice and I left a message once, and it's okay. We can reschedule. So then you're going to explain, all right, Diamond, this week on the second week, we're going to really focus on 2 primary tasks for you. Number 1 is you'll see in that email that you receive with the week 2 curriculum a link to complete a soft credit pull authorization. Did you do that, Diamond? And either she did or she didn't. It's important that she do that because you and I know we need to look at both personal credit worthiness and business credit worthiness. It's free for her to do the soft credit pull authorization. It doesn't impact her score. It doesn't commit her to anything, but it'll feed automatically into our system her credit report so we know what we're dealing with. Because ultimately, after you finish with them in 4 weeks of educating, we've got to go get them funded, and we need to know what we're working with. So it's not your burden to hold the client's hand and get them to do that. You're just reiterating that that was one of the clear instructions that was sent to them in the email for week 2, and ask if they've done that. Where you are going to get more engaged with them is what's called task 1 on week 2, which is developing the personal financial statement. And we're going to dig into that now. So if you've never completed a personal financial statement, I think this will be enlightening. It's important to have as part of the loan package, but it's also an incredibly valuable pre-qualification tool for you based upon preparing to write a key person policy for the client, because you learn so much about the client. And I'll show you in just a second. When we're creating a personal financial statement here in week 2 of the 4-week process, you should go into the mindset that it's a rough draft. We will have sent them detailed instructions. So frankly, they could and should be able to do it even without you. And we will have sent them the form, which I'm going to show you in just a second. But it would be great if you worked with them on completing this. Why? Because you're providing more value, you're creating more trust, and you're increasing the probability that they're going to buy a key person policy from you, which is going to be addressed in week 3, by the way, because you know so much about them and they feel comfortable with you. Different lenders can use different personal financial statements. However, we're going to use what's called SBA Form 413, which I'm going to show you in just a second. And it is a standardized version. Now, they may not be pursuing an SBA loan, so don't let them get distracted with that. We need to complete at least a draft one at this point, and it makes sense to use the SBA form because it is widely accepted. Just keep in mind that when we actually go to funding, we'll need to update the personal financial statement, and we may have to use a different format. It'll be very similar, but different lenders may require a different format, but it's very similar in structure. So the SBA side, if you go to the sba.gov and look up personal financial statement, it explains that the SBA uses this form, which I'm going to show you in just a second, to analyze the repayment ability and credit worthiness of an application for an SBA guaranteed loan. Well, I don't really agree with this because there's nothing about credit worthiness really depicted in the personal financial statement. We determine that through that soft pull that we talked about. And then also, if the client wants to leverage business credit, then of course we create credit worthiness under the EIN. But it certainly does help the borrower understand the repayment ability and important characteristics about the borrower. So you can download the form here. I've already done that and opened it up in this page. I'll make it just a little bit larger. So again, this is called SBA Form 413, and it is the personal financial statement used by the SBA. There's Form 413 written here. Again, we will have already sent this to the client. It automatically goes to them when I send them the week 2 content. So let's go through briefly how to properly help your client develop this or complete this. So we're going to start with completing the date. The date is important because this form probably is only accurate one day in their lifetime, right? Because each day we make money, we spend money, little subtle changes. And so it'll be accurate as of this date, but tomorrow it'll be a little bit off and so forth. But we'll want to go ahead and you'll want to have them date it and then put in their demographic information. Now, when you're helping them fill this out, you can do it in person, you can do it via Zoom, you can do it via phone call where you have the form and they have the form. That's really based upon your mentoring style of if you want to be sharing the document together or just referencing it. Now, in school, what we learn is you typically read from top to bottom and from left to right, and that's normally how we fill out forms. For whatever reason, again, this is the SBA form. This is not the TOM form. I had nothing to do with completing it. I have no influence on changing it. But I will tell you, I think it's confusing. Confusing is bad for the client, but it's actually very good for you because it's very unlikely that the typical entrepreneur will fill this out properly and optimally without your help. So you're creating value. You're literally helping them have a higher net worth by filling this out the way I'm going to show you briefly over the next few minutes. So you don't start with assets and work down and then go to liabilities and work down. Again, that's how we normally fill out paperwork. That's what we learn to do in school and in work. But in this case, this is kind of like the executive summary of the business plan. We're going to come back and fill this last. So this is going to be populated off of the information from the different sections below. So here it says section 1, there's no space. So again, the way it's formatted makes you think, well, this is still part of this top part, but it's actually not. So we're going to see different sections as we go through. So you're going to start with them on section 1 once they've dated and put their demographics at the top. So now we're going to go through income. What is your salaried income? Now you could be paid hourly too, but this is W-2 income. This is income that they can defend with paycheck stubs. Then they might say, I'm a realtor. I get paid $10.99. I don't have paycheck stubs. Then you're going to put in a 0 there, aren't you? Right? We're not debating with them. We're not trying to change who they are or what they have or what they do. We're trying to fill this darn form out properly. So salary means I've got paycheck stubs to defend it. And normally it would be on an annual basis. Net investment income, they may or they may not have. If they don't have any, what are you going to put? 0. It's not rocket science. Real estate income, they may not have any. It's okay. What are you going to do? Put a damn 0 there, right? It's not rocket science. And then any other income they have that's not captured through those top 3, that's where you're going to put it here. I'll put X's. Not meaning that you would write X, you'd write the dollar amount, of course. But that has to be described here. So if you don't have any description here, then you don't put anything up here. This would be 0. You can't do one part without the other. Nothing gets put here unless we have a description of it here. So it could be alimony, unemployment, student loans, independent contractor income, any other income, right? Okay. Then we go over here to contingent liabilities. And this means money that we might owe, but not for sure. Maybe we co-signed a student loan. We might have some potential legal claims or judgments against us. Maybe we have provisions for federal income tax or other special debt. Again, if there's nothing, just put 0. Don't overthink it. But if it applies, you'd put the dollar amount in. So now we're rolling down. We're to section 2. This is where we list notes payable, money that they owe. You can use extra attachments if necessary because there's only so many lines here, right? 1, 2, 3, 4, 5. So if they owe more than 5 people or 5 entities, then you're going to need to do an attachment to capture that. And that's pretty clear. Section 3, stocks and bonds. If they fill this out, what we'll do is we'll get really poorly submitted personal financial statements. And so there's, I don't have any, I have 0, I have nothing. Well, I thought you owned your own company, EJ. Oh yeah, I own my own company. Well, does your company have any value? Of course. Now, EJ may not know what his company's worth, but you can't dismiss the fact that you own at least one company because that's what we're working on is a capital raise for your company. Now, how they come about valuing it can be determined in a different discussion, but the bottom line is even if they don't have an IRA or a 401k, they don't have any individual external stocks, they still at least own their company, right? And that should be listed, and that may very well be their top asset. Section 4 is real estate owned. We'd put primary real estate in A and others in B and C. If they own more real estate, again, use a separate attachment. This is all pretty clear. Section 5, this is where a lot of people will do a real crappy job and they'll just say, I don't have anything. I don't have anything. Well, it's like, well, I apologize. I did not know that you live underneath a bridge in an old sleeping bag. No. Well, you've got assets, right? Do you have any furniture? Do you have any clothing? Do you have any electronics? This is like if you were going to go down to your State Farm agent and get a renter's insurance policy or a content policy for your home, right? What would it take to replace everything that you own? Now, remember, this is the PFS, the personal financial statement. Other than capturing the business worth up here in section 3, the rest of this is all about them individually. So you might say, well, should I include my business's desks? Obviously not, because we're talking about personal financial. Now, the value of your desk would have affected the value of your business up here in section 3, but section 5 is personal property. it's going to be very rare that you're working with someone that's just completely destitute, that has no article of clothing, has no furniture, has no possessions. Almost everyone has personal property, and we need to list that because that's going to increase their net worth. Unpaid taxes they may have, they may not, and of course it would be described here. If there's other liabilities, they would list it here. It may not exist. Section 8. This is the golden mecca, and I see so many of you that are licensed insurance agents. It doesn't get any better than this moment in time when you're working with an entrepreneur, helping them complete their personal financial statement. You're creating credibility and trust in a relationship. And here you get to Section 8 of the SBA form, and we ask, what type of life insurance do you have? And that's where you're going to list it. And so I don't know that there's a better qualification tool for a life insurance professional to credibly open up dialogue with the client about what protection do you have and what might you need. This is it. But nonetheless, you would list whatever policies they currently have. Now, we need to go up to the top now because we finished sections 1 through 8. Some of these are going to make reference to those sections below, like you see. Some of them don't, but we would not complete this until we've done sections 1 through 8 below. So then we just now we'll go ahead and start from the top down. How much cash do you have in how much cash do you have on hand and in banks? Oh, you mean in my business account? No, for the love of God, we're talking about personal financial statement. Whatever cash your business has would have been captured down here in the value of your business. This is a PFS, a personal financial statement. And then some people are going to be wise asses and they're going to say, well, Christopher, I want to just do this under my business. Well, great. You're still the owner of the business. The personal financial statement is an essential element of a loan package. Even if all you want to do is get funding under your EIN, this is a best practice. We need to have this created and on file in the loan package because you are the owner of the business. So even if they're not using your credit, even if you're not guaranteeing the funding, you are still involved, man. You own the business. And frankly, you need to create this important point. Listen up. Every owner that has 20% or more ownership, you need to be doing this personal financial statement with. Every owner that has 20% or more ownership needs a key person policy, which we'll talk about next week on lesson 3, or tomorrow, which is week 3's topic on the collateral assignment. All right, so you're going to ask them these questions and they're going to fill it out. Anything that refers to a section below, then you should really be, so for section 5, they needed to have listed down here for it to be qualified to add up here. So you can't just put a number up here and not have a description of it in this example down in section 5. Make sense? Life insurance, again, so this is cash surrender value only. The average consumer seems to not know the difference between the face amount of their policy, how much pays out if they die, versus how much cash value they have. If you're like me and you love indexed universal life policies, this is a great moment in time because you're going to see people that have a bunch of life insurance and a bunch of expenditures, and then you get up here and this is sitting on a big goose egg. I don't have any cash surrender value. Well, we might want to look at how you're protecting your assets and the composition of your life insurance and maybe include some elements of your life insurance protection that's actually accumulating cash value. But I'll let you take that from there. Stocks and bonds, again, is summarized from section 3, real estate from section 4, automobiles had to have been listed in section 5, personal property in section 5, and other assets in 5. And then we total it all up. So all these numbers get totaled right here, don't they? And we're almost done. So then we slide over to liabilities, any accounts payable that we have, any notes payable, which would have been listed in section 2, installment accounts such as autos, the total amount owed and how much the monthly payment is, any other installment autos, total amount owed, what the monthly payment is. If you have any loans against life insurance, again, what another teaching moment. They're like, I didn't even know I could take a loan against my life insurance. Yeah, you can. If you have the proper type of life insurance developed, it not only protects your assets, it can be a source of cash, and often you can borrow against it. So again, you can have that discussion outside of this PFS if you need to with them. Mortgages on real estates, which will come from Section 4, unpaid taxes, which would have been from down Section 6, other liabilities, which have been listed down on 7. Now, again, this form is confusing. I'm sorry, but I didn't develop it. I can't change it. So when you get to total liabilities here, this is going to be the addition of these items above. And then net worth is the difference between their total assets and their liabilities. So let's say that we'll just use some round numbers. Let's say that I have $100,000 of assets, and we added all my liabilities above, and it came up to 50,000. So then my net worth is the difference. It's my assets minus my liabilities, which would be 50,000. And then when we get down here, we know it's an accounting equation. If you took or taught accounting, you'd know that the accounting equation is assets equals liabilities plus owner's equity. So essentially these two numbers will make it A, and B need to add up to this. So this needs to be A plus B. So this would also be, in this case, 100,000. And so what that means is our accounting equation is balanced. This is 100,000 and this is 100,000. Okay, so you can certainly practice developing a personal financial statement on yourself, a friend, a family member, but if you're going to be a joint venture incubator manager, you need to have the ability to help clients go through the 4-week process as their mentor. And week 2, you're going to remind them to complete their soft credit pull. The link will be included in that email that's sent to them. And then also you're going to help them complete the personal financial statement. That personal financial statement tells you so much. It lets you know if they're stone cold broke or if they have liquidity. It lets you know what kind of life insurance they have. It lets you know what type of retirements they have. It's great information. And obviously it's needed for the loan package, but it's going to also prepare you for week 3 next week as you start talking about the key person policy. Okay, so let's get to your questions, comments, concerns about what you do when you're mentoring a client in week 2. Now, I know the topic is about business credit, and we'll take care of that with them. That is not your burden. However, if you're a joint venture incubator manager, what you always have in the top of your mind is, hey, if you want to build business credit, there's some minimal credibility standards, aren't there? And one of which means you have to have a commercial address. We cannot help you build business credit using a residential address or a post office box. And the old school shared addresses where you have the same suite number that a bunch of other small businesses use typically doesn't work either. So you should be able to dovetail, again, even if when you reviewed the profile with them in week 1, which we talked about yesterday on yesterday's training, you have another stab at helping them get enrolled in your incubator, or at least using the commercial address that you offer, which will put $500 gross in your pocket. You net $250 with the 50-50 split, because we can't build business credit unless they have a commercial address. All right, so let's get to your questions and we'll wrap this up here. So let's see. Okay, I don't see any questions regarding the role of a mentor and taking clients through this process. So does anyone have any questions that you want to type into the Q&A box here on Zoom? It's like a chat box, or do you feel like you've got it? Because as a joint venture incubator, you're open for business, right? We've created a landing page for you. We've created a tracking mechanism. We've given you the flyer to use to drive people in. And then we've talked about using education as a means of filling your funnel. You know that once clients enroll, you're going to be mentoring them through this 4-week process. And now through this week's training, yesterday we covered what are you going to do with them on week 1. And today we covered what are you going to do with them on week 2. Any other questions, anything that you need to know to be able to mentor clients through the first 2 weeks of the process? Again, tomorrow we'll go through week 3. All right. Thanks, everyone. Great conversation, and we'll see you back tomorrow morning. Bye-bye.